I mean, since the spin of Siemens Energy, I think it's fair to say that Siemens has been going through a tremendous transformation, embarking on empowerment and also on the pace of decision making. We have been improving substantially. Nevertheless, there's also quite a lot of challenges out there. In challenging times like this, it's good to be based on mega trends, as we call that. We are capitalizing on the mega trends of electrification, automation, digitalization, and last but not least, sustainability. So the big picture, I dare to say, is okay. Still challenges around, and if I look at the portfolio at the moment as it's developing, I believe that SI is really stellar performing at the moment. They are meeting all their targets earlier and ahead of their own schedule. Back in 21 at the Capital Market Day, they were sitting at 8% profitability. Now they are guiding 16 to 17. What a change journey.
Yeah.
Mobility is still, I think, a clear technology leader and also leading in margin. And our software's SaaS transition, as we call that, software as a service, is making progress consistently and steadily. So automation is the challenge of the day, and everyone knows that destocking is the challenge. And there is also a sentiment that has not been really supportive for major investment decisions in the capital goods sector.
That would be my next question. I mean, we pronounced weakness in China. Now with the PBOC acting, it could be a silver lining on the horizon. Mm-hmm. So what is your hope and your assessment there, and how is China going for you?
Mm-hmm. Yeah, unfortunately, hope isn't a strategy, so therefore we need to wait for facts. It's promising, as you said, a silver lining that can set the pace for new momentum, but we need to get that in a tangible format to really assess what opportunities we have, and especially when they are going to materialize. Typically, there is some lead time before that is getting tangible new orders. Till then, we stay alert and we're looking at our own business. So destocking is making a bit of progress. So the lead time, the days on hand, so to speak, on the stock levels of our distributors has been coming down a bit from 14.5 to 11. But the sellout from the channels is still erratic. So therefore, we stay alert, if you will, and mathematically, if we just take the numbers, destocking is going to take till maybe February or March next year.
So until we see a real recovery in demand, this will be the first quarter of next year?
Probably the first two, but there's a lot of uncertainty around that at the moment. The real trigger for momentum is when the so-called book-to-bill fast-turning orders are kicking in. Then it's the time for capitalizing on momentum. And we have the breath to wait, but we also need to be mindful and do our homework in between.
What is your homework in between?
We're looking at our sales force. Where are the pockets of growth? Where can we invest? Where do we see solid profit pools on the way ahead? And we make selective investments there. What we do, for example, if we are extending our capacity in electrical products in Germany and in the US. We are building an additional factory for high-speed trains in the US, which will be the game changer for that entire business, country, a whole continent that needs, I think, a lot of support in that field, and we can help. And then there's also, for example, the third competence center for data centers we are building up in India. So very selectively, straight to growth pockets. That's homework in that regard. And looking at the cost base and also investing meaningfully, capital allocation is the core task of any CFO.